It's Kaylee, the teacher of finances, and it's Monday. I get to wear my cool hat because it's Mythbuster Mondays. So I'm on here today to talk to you about a controversial topic. Like I said in the title, some people probably don't want to hear this, but I'm here to provide you with some facts because I believe that you care, and it's just important to um, bring insight into what's really important when it comes to life insurance policies. So Monday's always about Mythbusters, and I come up with different types of myths that I've heard as I've been an agent, and I'm just sharing with you why it's true or why if it is true or if it's not true. So today we're going to talk about life insurance coverage or coverage through your job just in general. So likely you have a job and you have coverage through your job. Oh, I always forget this part. But if you're watching this live, drop me a one, please. If you're watching this after I get off of live stream, if you'll drop me a two in the comments, that would be awesome. So this hat like blends in with the new hair. It's kind of crazy. Like I put it on and I was thinking, wow, it like blends so well. Didn't really mean for it to be this dark, but it'll fade. So here we go. Anyways, back to what I'm saying. So if you have a job and you have coverage through your job, that's wonderful. Probably doesn't cost you very much money, which is great. But couple things to think about. How long are you going to be with that job? I mean, we are not going to you could work until you pass away there, right? I mean, if you died unexpectedly or you worked there for a long time, absolutely. But the reality of it is you're going to leave your job. Whether you retire, you go somewhere else, you do what my husband and I did and become self-employed, you're going to leave. And so your coverage only covers you while you're employed with them, right? Now, think about this. You're healthy, you're young, you have coverage through your job, you're not worried about it right now, but something happens 5 years from now, you you get diabetes, and now you have neuropathy. Do you know how hard it is and how expensive it can be to cover neuropathy? You can cover it, but it can be harder and expensive compared to you being young and healthy. If you get coverage outside of your employer, now you are insurable, meaning that that company can't tell you no when the diabetes comes along or when something bad comes along. You are going to be able to have that coverage regardless of whatever health conditions comes after the fact of having the coverage. But if you have work insurance and you decide that you've came down with something else, you may be leaving your job, your health conditions have changed, or whatever the case may be, you had cancer or all the different types of health things, you had a heart attack, all those things, it changes the way that the insurance company looks at you as a risk. Why am I talking about this? Why am I so loud about it? Because it's important. It's important for you to understand that when you leave or retire from your job, that policy you have is terminated. So now you no longer have coverage. Can you pay an offset amount? Absolutely, but it's expensive. So expensive. I looked into it whenever I left teaching, and I couldn't it was just not affordable for us. The other thing, I said, if you get sick, have a life event that causes you to leave unexpectedly, you don't get to take that benefit with you. Another thing that can be crazy scary about life insurance through your job is the organization, let's say they had a financial change, they can cancel or reduce the policy. They are in control of your policy. You're not in control of it. They are. They get to determine what type of coverage. They get to determine how it works. They get to determine that. It's a group policy, so they get to have that right. So if anytime that a company changes, maybe they change ownership, you could be stranded without any type of coverage. So employee insurance may be sufficient when you're young and healthy, maybe without responsibilities. But at the same time, even if you are young and healthy, nobody knows when we're going to catch something. Nobody knows when we go to the doctor and we have a sore throat for a week that it could be throat cancer. Nobody knows when that's going to happen, right? And being protected ahead of time is so crucial. Being protected through something that you own is even more so crucial. So half of Americans who have life insurance, like I said, which is amazing, and it's so great because you are thinking about your family, you are thinking about what your assets are and how much it's going to take to cover those assets if something happened to you. Most of them are uninsured, like they're underinsured. Sorry, I almost said uninsured. They are underinsured. So what does that mean? That the death benefit would not cover expenses like mortgage, college, food, debt, clothing for dependents after the event of their death. So something to think about. The median workplace life insurance coverage is just 1 year's salary. So, U.S. households that rely upon workplace life insurance coverage, 48% of them say that families would struggle financially in less than 6 months should a wage earner die unexpectedly. What happens in that situation? Now, what happens is somebody passes away unexpectedly. You have 6 months to be able to cover your expenses, but then what? Do you have to move? Do you have to move your kids' schools? What do you have to do? Do you have to move back in with your parents? Love my mom, dad, love you all, but I don't want to move back in with you. Sorry. It's been a long time. I'm good. I like being on my own. So many things come into effect whenever you're not prepared. So, moving into the next topic. That's going to be where I mentioned that it's not going to be enough to cover anything extra. You might be able to get by, you might be able to find a house and lower your expenses and all of those different things, but it's not going to cover anything extra. You're not going to be able to have money for emergencies, raising your kids, all the extra things that come whenever one spouse passes away, like stay at home mom passes away. People always say stay at home moms don't need insurance. No, they do. You need it. You need it because of the fact that if something happens to you, now your husband has to have somebody help take care of the kids. Now you have to have daycare. You have all these other things that you took care of. Somebody else is going to have to step in and do. And likely they're not going to do it for free. So when you're looking at the death benefit, you may say, well, okay, I guess I see what you're saying, Kaylee, but how much do I even need? So on average, the rule is 5 to 10 times your annual income, which sounds crazy, but think about how much your mortgage payment is. How much do you owe on your house? How much do you owe on your vehicles? How much do you owe on all of those types of things? How much do you spend a year in insurance and food? All of those things. It adds up so fast. So if you make $75,000 per year, then the ideal amount of a policy for you would be about $750,000. That covers you. I mean, that covers 10 years worth of expenses for you if you really think about it. So it is very, very important. Work insurance is not going to give you that much of an option to get that high of a policy. Something else when it comes to that, you may be able to add on to it, which is great. But right now, you're likely, one, you're the youngest you're ever going to be. And two, you're likely the healthiest you're ever going to be. So right now is the best rate that you could possibly ever get. So another thing to think about is when you're out on your own and you retire, what happens? Okay, so now you're 65 and you depended on your work insurance, and this is what I face all the time because I work with a lot of 65 and older. I see it all the time. You are 65 years old, you've been diagnosed with X, Y, and Z. You realize that your work insurance isn't going with you and you're ready to retire, but Social Security is limited. Your 401k has lost a lot of money this year. How are you going to take care of your death benefits, final expense benefits? How are you going to take care if you end up getting terminal illness, critical illness, all of those things? But because you've been diagnosed with X, Y, and Z, your rates are higher. So it's super, super important for you to supplement your employer provided coverage with something that's customized for your needs. You don't have to start out huge if you can't. You can always go from a smaller and add more. But getting something now while you're healthy and the youngest you'll ever be is super, super crucial. So find a policy that can support you financially through all your years of living. So not just through a little bitty time frame, but through all your years. I posted something today about infinite banking. Infinite banking is a way that you can you can become your own baker, but you can also there's a death benefit associated with it too. So it's like a double whammy. So there's all kinds of different things. But I am just super passionate about it. I think it's so important. There's so many things in this particular industry and that particular topic that I had no idea about. I always would have said this. I always would say, I got it through my work. I got it. I hear that from everybody all the time. No matter who I talk to, I got it through work, and that is wonderful. But it's so important for you to find something that you can own and control. So I just wanted to share that with you guys. I'm super excited about doing all this week. Oh, and by the way, our myth or our topic today was my work coverage is enough. And the teacher of finances debunked that it's not enough. It's very important for you to get more. So if you check this out, if you joined on here and watched live, I appreciate you. Thank you for listening to me. I went a little bit longer than I expected, but thank you. I appreciate all of you liking and commenting and being a part of my lives. I love doing this for you guys, and I will see you tomorrow for Thoughtful Tuesday. I hope you guys have a great evening. I will see you later.